One thing you mentioned there in regards to price action,
Mm-hmm.
it was pure price action. And I said when I did the podcast with Mark,
Yeah.
said the same thing. Like he was probably, as you said, actually ahead of his time in terms of he was probably one of the first people to really put just pure price action
Mm-hmm.
at the forefront. And sort of have a strategy surrounded just by that. But nowadays, as you know, price action wise, we're talking SMC, smart money concepts. What are your thoughts in regards to you trade just pure price action, and now you see something that is really popular and almost cult-like now with smart money concepts, which is also price action. And was there ever any sort of, not doubt, but sort of inkling to be like, oh, let me look at this?
I have looked at it.
Yeah.
No, I think there's the part where people like, it's funny enough because you could get like the traditional community shots of like, oh, you want to sell Falcon or whatever. Speaking for myself, and I'm sure Mark is like, well, like me saying this, but it's like, dude, like we still all look at sides of things. Like we're not stupid in the sense of like, if there's something that could make us more profitable, we would look at it. You're not gonna hear about this phenomenal way to trade and you're like, nah, man, I'd rather just make less money for what? Yeah, you know what I mean? Like, no, you're gonna do it, right? So I have looked. I would say what's interesting about it, the parts that stick out to me is one, the side of like, there are a lot of words that are just reused, and that is kind of become a bit of the social media side of things where people just love to use bigger words.
Yeah.
Like saying double bottom now is very retail and outdated. And then there was actually the fundamental understanding of retail, what that means. And I think there's a huge dichotomy, and I would say it's become a lot more cult-like because if I look at it, and maybe I was just young at the time, I didn't realize it, but when I was trading like EMA back then, no one cared what you traded. It was kind of like, if you're looking at trading strategies, it was almost like, what sport do you play? And I'm like, oh, you play basketball, that's sick. And I'm like, I play tennis. And we both had a respect for one another. Now it's, if you don't play soccer, you're a moron. And I was like, how did we discredit everything? And then on the logic side of things, I would say it doesn't make sense, if I'm being honest. Like, I'm not saying SFC doesn't work. I know for a fact some people trade it and they've made it work. I'm saying the logic that people are defending behind it of, if hypothetically trade like an institution or whatever, and forgetting the logistics of why that's not possible, it's the side of, okay, if the institutions are trading like an institution, if now everyone seems to be trading SMC and variations, they're also now institution-like. We know statistically from my Forex funds that you have like a 99.7% chance of not getting a payout. So all those people are losing money. Who's this retail that's left that's feeding the entire ecosystem? Like when you actually and they're also buying Bitcoin at the top, like these retail people that have subjectively become a shot, they're just losing money across the board. How is it not diminished? And it's also part that people forget that institutions are not like one commodity. Like they're all like JP Morgan is friends with HSBC and Goldman, and they wake up and they're like, oh, I can't wait to get Riz today. You know what I mean? Like they're still battling one another. It discredits a lot of the market fundamentals of like, especially with Forex, right? Like if you're a big real estate conglomerate in Japan and you are settling some transactions from the yen to the dollar, that's a Forex transaction, right? Even just buying water or Starbucks or whatever, these are all Forex transactions going to GDP that goes into all this thing. I think people kind of became extremely cult-like in that way and just look at it as like, you are trading the stupid way, you're on the wrong side of this. And it's almost kind of put this whole, like, if you are not on this side, you're automatically the liquidity on the other side, not factoring in that, like, why is the other side liquidity like unlimited? That was the side to me that makes no sense. And then, of course, the whole, like, trade perfectly like the bank, which kind of implies a 100% striker and all these. If you look at the stats, it doesn't back that. Like, that's the side of me. I was like, you know what? If FTMO came out and was like, hey, dude, all these people trading this way, they're all making, like, 6 million a month. Yes, I would switch to that way of trading. Like, why wouldn't I? But you actually realize the statistics are horrible, right? I think like my Forex funds released it recently. And the part what was scary is, if I remember this correctly, last year, the stats are worse than last year. I'd actually argue trading education, I'm sure you agree with me, is the best it's ever been.
Yeah.
Like not just Falcon, I'm talking like all trading communities have like leveled up. There's better infrastructure, yet the stats are worse, right? You have, I think across the board, like from entering an assessment to payout, it's like a 0.28% chance. And there was a big drop in one of them, right? Like the phase 1 last year, like a phase 2 this year is 45 to 42. The other one was 31 to 19. And I was like, wait, it's dropped by like 12%. Yet education's the best it's ever been. Apparently everyone's like trading with the banks or whatever, but the stats don't show that, and you see even basic psychological stuff. Like they said in their things, like people are trading through swaps, or I remember one of them was their most profitable traders hold trades for more than 6 hours. That part to me shows people are trading tiny ranges. Like if you're out of your trade in less than 6 hours, it likely means, again, using a holistic approach to most strategies, that you're trading a very tight range, right? Versus if you can survive that part, you're probably playing something with a bit more higher time frame. So I would say the logic, as I said, for all of it to me, I do listen, right? But in the same way mainstream media kind of portrays things, traders are not like exempt to that. Like, I think that's where kind of people kind of come in and they're like, oh, I'm a trader now, so I think differently or whatever. But then a lot of things do become mainstream in that way, and all of a sudden you realize a lot of people are trading the same way, and it's like, if you're all trading the same way and we're all categorically retail, who's on the other side of this trade? You know, like, who's this dude with $1 trillion who's just losing every day? So that's kind of my point of view on it. But again, it's not a shot at any particular actual strategy. I'm talking about like the portrayal of it, you know.
Mindset.
Yeah.
In regards to the stats, I know obviously we've talked about you understand data, you really have looked into data throughout your journey so far, let alone trading, but so obviously I can imagine even more so in trading. What was it like, obviously, hearing those MFF stats that came out?
Depressing. Dude, when I came in, right, it was the whole like 90-90-90. That was like the bad one back then. And honestly, part of me thought they would be better. Like, I knew they would be bad. I didn't think they would be that bad. And if you think of it from like my Forex fund's perspective, it's actually bad PR. Because it effectively tells you will not succeed. You know? And there was part of me, I was like, damn. And when you actually look at even like their observations or whatever they were saying like stuff like indices has, like the US 30 has the highest amount of losses. It's very easy to understand why. These are high like volume pairs that get big candles. So you could see that greed side of things that people trying to like make money. I think they said gold, people did well on gold, do better in Asian sessions, so to speak, rather than New York. So again, when the volume was down, indices being their worst point, that might be in my Forex on things, because I don't trade indices personally, but I do believe they have worse spreads on my Forex funds for indices. So that might be more specific to them. But I think I still do agree from the side of like, a lot of people say don't trade Forex, it's boring. It doesn't move enough. That not move enough perspective is the part that I'm tackling. And when you see people fail like assessments within like a first week, I think TFT said that, like I think they lose it within 5 days or whatever. So even right now there's this whole debacle of like trying to get the no time limit or whatever. And I think TFT, whoever said on the Twitter account, it's like, it doesn't matter. He's like, we can give it hypothetically, and they probably will, to be honest, right? Yeah, because they know you objectively fail in that point, you know? I would say from the side of like, and maybe prop firms are a bit to blame for this, is they've made 10% a month seem standard. Yeah. Whereas, again, in our time, we were a bit more humble. Like, back then, if someone was making 10% a month, that guy was an absolute god. Like, he was the best of the best. Whereas now it's like, if you're not making 10%, you are dog shit. Like, don't trade, right? Yeah, so even, and I'm sure you've done this, the whole like, you put on like an account on like a compound calculator, and you're like, I'll put in a monthly return of like 1%, 2%. And you know, you want to up it a bit, and you're like, you find the answer that resonates with you. So for me back then was like, okay, if I could make 3% every month, no matter what, okay, within like 4 or 5 years, I'm financially free. I was like, okay, I can do this. And 3% was nice because I was like, I knew 10 was like the really good, but I was like, yo, if I can just get it to 5, I'm financially free. And then I could focus on becoming like the god, so to speak. Yeah. Right? Versus now, obviously, because they're seeking the best of the best, and part of it is to like, I don't say like it's built in an evil way to make you fail, but yes, demanding 10% within a certain period of time and market conditions, all those things, it plays in a big factor, right? But it's made the norm of like, oh, you only made 2%.
Because it takes away from an edge.
Yeah, exactly.
You can't say, my edge has to do this.
Oh, that's just 30 days, exactly, whatever, right? And I would say that actually kind of why it did bleed into the SMC side of things, like this whole tighter stop loss. It kind of became a perfect storm in that way, because if you're swing trading with 80 pips or 120 or whatever, good luck making 10%. You know, so there's that side that almost priced out that entire side of trading. Yeah. And it became a math problem now of like, how am I going to make 10% with a 35 pip stop loss? I need to have 5 pips or whatever. So I think in a way it was a bit of a perfect storm from that point of view, but people not understanding, and don't get me wrong, people give the other side of the equation where they're like, well, look at like these major hedge funds that make 20% a year. I think it's a false comparison because they really discredit the side of like, they have to move such large amounts of volume. Yeah. It's physically not possible. And the more I've seen with people is the more they don't understand like how liquidity is spread out, meaning like even simple things like entry slippage. Most people don't even know that exists, because chances are if you're trading a 10K account, your order's going to get filled, right? Like the money, like when you're taking a trade, someone's taking the opposite trade somewhere. And you hear the whole, like, the Forex market has $5-6 trillion, but the part they're not mentioning is it's not sitting at, like, at euro dollar at 1.1, all 6 trillion just waiting there. That's throughout the whole market, throughout different times, throughout different days. So if you're trying to enter in a certain part, so to speak, you may not even get filled, and that may not be there. And they see that as, like, my Forex funds being scammers on, like, CPI or whatever, when the reality is that's when volume is the lowest, but the volatility is the highest. So you might see this big candle, but it doesn't necessarily mean it was this major sell-off. It actually can just mean that the bid and the ask were so far from one another that it creates that. And same thing with a flash crash. Flash crashes naturally happen in the times of the lowest amount of volume, you know, because there's no one to fill the opposite order, so to speak. So in a way, if people actually understood a lot of that side more, they'd realize a lot of the let's call it faux marketing, so to speak, or lack of knowledge in that way. And then and again, not saying the strategy doesn't work, I'm just saying the ideologies behind it. And I would say in themselves, they'd actually probably succeed more, as I feel like a lot of people spend time kind of just throwing shots at other people. And that was, like, I never really got into it personally. Like, as I said, I've looked at it from the point of view, it was like, if you want to say we're retail or whatever, I don't care, it works. Like, I really don't care. Fine, categorically. Like, people say, like,
the thing is, we're all retail.
Yeah, we are, but people don't want to admit that. Right? They'll be like, oh, Falcon trades patterns or whatever. It's like, it's kind of funny because it's a bit of a shitty comparison, but they'll be like, oh, it's on baby pips. It really is not. Like, I'm not saying that to market. I'm saying it's like, you would not be able to build something for over 7 years if it can literally be found on baby pips. Like, at some point, that's the logic side of me. And for myself, even when I joined, I was like, you can't at some point, like, be wrong or falsely wrong forever, right? So that was kind of the point of view on it.